Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Oana. Good morning, Las Vegas.
Yeah, good morning, Vegas. So this is an update for the Las Vegas real estate market. This is our weekly update. We've been doing these weekly because the market's been going through this interesting change here. We just did we did, like, today's a twofer. We just did the national video because the national numbers came out. Fed is meeting today with their we think is going to be a quarter point. But what's interesting is mortgage rates are down. Mortgage rates have dropped considerably, and it's already priced in a 0.25 basis, which I think.
Well, I think mortgage rates have dropped because they're looking at the long term, what's happening in the market, in the financial market, and they're kind of seeing the writing on the wall.
Okay, all right. So we'll start with the market action index 39. This is the highest since what, the summer?
Right.
August, maybe?
Maybe.
It was 36 last month. It's 39. Remember, it sat at 30, 31, 32 for 6 months?
Right, but that's a big jump from 36 to 39.
In a month, it went from 36 to 39. We'll flip over to the next screen, the real-time market profile. The thing that really, as you can see, that at the very top, median list price is still much higher than it was 2 months ago. Price per square foot on February 24th, it was $249. Then it went up to stepped up to $250, and then now it's up to $251. If you look at that, now remember, this is $1 per square foot, so rounding it can pop up and down. But if you look all the way to the left, it was high, and you could see go down and up. That's literally the bottom. We called the bottom of the annual cyclical market before we could see it. And what made us believe that was happening?
So when the numbers got inverted.
When the numbers got inverted. So we're going to talk about that because we have these sort of forward-looking numbers that we go through with Altos Research, and they sort of tell us we can see the change in the market. The other thing we see the change in the market too is as soon as the list price starts to rise. And why is list price rising a significant indicator?
Because it's forward-looking. Because remember, sales are looking back at what happened 30, 45, 60 days ago, but list prices are an indication of where the market is going.
Okay. The next slide here is this price per square foot. This price per square foot is for all properties. This is a much smoother. What's interesting is if you look at the little dashed line, that's the 7-day average. Every place that dashed line is above means the trend is higher, means the trend for prices are higher. As you can see, we got to last year where it peaked and it started dropping, and then that little dashed line dropped below it, and then it started trending lower, right where the two lines crossed. And if you look all the way over to the right, this is the first time we've actually measured it. The 7-day average is 251. The 90-day average is 250. This indicates that it's highly likely over the next some period of time, few months most likely, that median prices, not median prices, but price per square foot is increasing. Why is this a better indicator of a median price? Like, how is this different?
Right. So this is a better indicator because it's looking at like for like, right? So it's looking at the price per square foot versus what's happening in a mix of homes, because you're going to, it looks at, the median is going to look at, it's going to combine the higher end homes, the middle and the lower, and it's going to make this whole adjustment in that way. And that's not always a good way to look at it. By looking at price per square foot, you're looking at actual increases in value on particular properties, because if this property sold yesterday for $250 and it sold today for $251, then the price per square foot makes more sense.
Yeah, here's another way to think about it. If you sell 3 houses, 300, 400, and 500, the median is 400.
Right.
Median just means middle. All it means is they took out everything above the middle, everything below the middle, and they picked that number. Let's say the next month or whatever, only 2 houses sold. The exact same homes, just sold to a different person. But no one sold the 500. The 300 and 400 sold. But they sold for the same price. Price per square foot would be exactly the same. But the problem is the median, they would take the 2 homes, 300, 400, and they would go, well, then what you do with median when you have 2 is you average them. You take the in between. So it would be between 3 and 4 would be 350. So a layperson would go, median home prices were 400, now they're 350. They've dropped. They've dropped 12%. Now they haven't dropped 12% because we've got our slide that's going to demonstrate that exact thing. Okay, they haven't dropped 12%. The mix of homes Now, in a market where you're selling thousands of homes, that is generally a good indicator.
Mm-hmm.
However, when the market gets goofy, wonky, less sales, it becomes less of an accurate indicator whether the market's going up or going down. Because if you have more people buying lower end homes, even though those home prices are going up, it can still make the market look like it's going down because you don't have the homes on top to take out when you do the median. It's pretty simple.
Mm-hmm.
Okay, this is the actual thing driving why prices are going up, even though interest rates are 50% higher than they were a year ago.
Okay.
Inventory. Now this dashed line shows where inventory is going, and it's basically going through the floor.
Mm-hmm.
It's going down pretty hard. This was not predicted by the market crashers. They said inventory higher than it was in 2008. 2008 nationally, we had 4 million Vegas. We had 26,000 homes on the market by the end of 2006, which is sort of where it reached its peak. As you can see here, we're down to under a couple thousand. We're under 4,000 for Vegas. This is just for Las Vegas, right? And you can see the trend. The 7-day average is actually under 3,000. Is it possible the inventory could go below zero?
No.
No, can't go below zero. But when you go over to 2019, the last relatively normal market we had, you can see we're like half.
Right.
And that was a normal market. But you were told that the home, this is the actual thing driving. Forget what interest rates are doing. We have more cash buyers, and median prices are down mostly because the mix of home sales are down. We actually have a slide that shows that the bottom 3/4 of the market, the homes are more.
Right.
Yeah.
Yeah. I mean, look, inventory is likely to, start to increase at some point because sellers are going to, they're going to thaw out a little bit. They're going to need to start getting moving. So it is likely we'll have more inventory. What that's going to do to the market, we'll see. But I think that more inventory would be healthy because that would give buyers some more choices.
What about all the foreclosures that are getting read, the shadow inventory of foreclosures that the banks have been holding on to, waiting to release? What about those?
They don't exist.
Okay. Okay. What about the millions of new homes that the builders have built that are just sitting there, that they're just waiting to dump into the market?
They certainly don't exist.
They certainly, KB Home, the largest home builder, last year built 13,000 homes.
Yep.
And they sold all of them.
Mm-hmm.
Only 37% of them had price reductions to
Right.
sell. They did offer some incentives on the rate buy downs.
Mm-hmm.
The big news was in the fourth quarter, KB Home had in Vegas and everywhere had a lot of cancellations, but they all were contracts were purchased by somebody else.
Right.
Or they already have been put in the MLS and sold. Because explain to them what happens when a new home builder doesn't sell it at the sale. Like if you walk in and you don't buy it at the sales office, what happens?
Right. So if the new home builder built a spec home and it didn't, and they haven't sold it, or if they built a home for somebody and for whatever reason that buyer did not go through with the transaction, the home will be put in the MLS because, of course, the builder wants the greatest exposure possible to get that home sold. So that home does become part of the counted inventory. It's not a separate inventory. It does become part of the counted inventory.
So all those homes that are supposedly going to crash, whatever, they're already counted for in inventory.
Right.
Yeah. Okay. This is the big one right here, price per square foot. If you look at this, this is the 4 lines. The top line is the top quarter, the most expensive homes. And this is closed price per square foot. This is already sale price per square foot. And then you look at the bottom 3 lines. This is the bottom 3/4 of the market. As you can see, if you look at the little triangles, that was a year ago today. So the triangle on the right's today. If you look at those triangles today are slightly above last year. Mm-hmm. Year over year, if you have a home that is in the bottom 3/4, basically under probably 600,000. And these are median. This is price per square foot. So it's the price per square foot of all homes in those ranges. They're up. Yes, they're down from the peak, right? But if you look at the high-end homes, look what they did. They go up, they went down. They went up, they went down. And then, they do this every year. They go up in the spring, they go down in the fall because that more homes come on the market, it becomes softer pricing.
Right, and the higher end tends to be more volatile anyway.
Yeah, and as you can see, what's going on with the lower end is basically leveled off, and then the higher end stuff has started to go back up, which is really not expected given interest rates are 50% higher.
Right.
Like, this is pretty telling. You can see this thing starting to ski slope and go up.
So it'll be interesting to see what happens to that higher end with the backdrop of the banking issues in the last couple of weeks. I think that we won't really see that change for another couple months, but it'll be very interesting to see in a couple months what that looks like, what people in that price point took away from the bank issues.
The other reason why this chart's important, a lot of people keep quoting the year over year, price that Redfin quotes or whatever. The average prices have dropped 8%. Well, if you look at the blue dots and you look at the pretty substantial decline, $50 a square foot? $50 a square foot for a high-end home. And multiply that by the fact that may be a $2 or $3 million house. That's a huge amount. So if you have a ton of sales in a high amount, and then you have a substantial change in that price, it more changes the total overall numbers of the market. So you can have a small home appreciate a couple percent in value, an investment home where an investor paid $300 for it and they're getting $2,000 a month rent, right? Those homes are basically the same. Then you take this super high-end home that's down substantially and you average that in, and it weights down the whole. Sometimes you have to break the market into segments. That's what we did. We broke the market into 4 segments here with this little tool to see exactly what's going on in the market. And you can see, yes, that from the peak, which was the peak ever, the highest ever of home prices in Vegas, probably in the nation too, not in the South or the West, because home prices are still going up there, that's what this shows. This basically shows, that's why you just can't sometimes take the Redfin, what Redfin says. Well, that's great, but Redfin, is just grabbing all the data and sticking it together without really looking at what's going on. Because what's likely going to happen now is the numbers, as we showed, price per square foot was rising. It's rising in Vegas.
Yeah, you do need to look at it by market segment because it makes more sense as to what's really happening in the market.
The other thing, too, that affects it is, because more people are paying cash and buying in the lower end, you have more sales in the lower end. And that also pulls down that number because, remember, median is based on the numbers. It's based on where the middle sale was. So the mix of homes sold affects. That's why median has gone down, but price per square foot is going up. We're going to keep seeing price per square foot likely go up. And then as interest rates drop, I think we're going to start to see the median start to go back up again. But yeah, a year-over-year comparison is not realistic. There was a lot of panic buying last. Right. People were trying to get in before interest rates went up, right? And they artificially bid stuff up. So if you just look at year-over-year numbers, you don't think anything has happened.
Right.
Yeah.
All right. What you got?
That was it.
That
was the update for the Vegas.
All right. Awesome. Well, thank you for sticking around with us for 2 videos today.
2 videos.
We appreciate it. Did you have an extra cup of coffee? Tell us about that. So please like the video, subscribe, hit the notification bell, share the video, leave us a comment, and we'll see you on the next video. Bye.
Bye.